Today, Bitcoin inches higher even as the U.S. job market remains red hot. The U.S. Justice Department looks to launch an independent investigation into FTX's bankruptcy. And attorney Charlie Gerstein explains whether FTX customers will ever see their money again. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Major cryptocurrencies rising to close out the week. As of noon Eastern, Bitcoin traded right around $17,000. Ether is rising as well, hovering just below $1,300. Meanwhile, Dogecoin dropped sharply, falling to 10 cents. As much as FTX weighed on crypto prices last month, this week the spotlight was on macroeconomic factors. The latest jobs report was released this morning, and yet again, the U.S. economy added more jobs than Wall Street expected. Wages continue to rise as well, and this rapid economic growth is likely to drive more rate hikes from the Fed. That is bad news for risk assets like crypto. Now, Fed Chair Jay Powell said as much on Wednesday during a speech at Brookings. Powell made it clear the central bank is committed to more restrictive monetary policy, one that will help get inflation down from 7% to 2%. But at the same time, he also said the Fed could slow the pace of interest rate increases in the near future. Even with all the economic news this week, Bitcoin still rose about 2.33% in the last 7 days. Ether is also up, climbing more than 7%. That's its best week since October 28th, before the demise of FTX. Okay, let's catch you up on some other headlines you should know. First, the DOJ just asked to launch an independent probe into FTX's bankruptcy. In a filing with the Delaware Bankruptcy Court, the Justice Department requested the appointment of an independent examiner to review, quote, substantial and serious allegations of fraud, dishonesty, and incompetence. The DOJ also said an independent investigation was better than an internal one because of the wider implications the company's collapse could have on the crypto industry. Some experts also point to the fact that Sam Bankman-Fried donated millions to politicians on both sides of the aisle. A former federal prosecutor told CNBC that this method of hiring an independent examiner could also be a way for the DOJ to gather evidence, both against the company and Bankman-Fried personally. Now, SBF said publicly this week that he is not worried about jail time right now.
That's not what I'm focusing on. There's going to be a time and a place for me to sort of think about myself and my own future, but I don't think this is it. Like, right now, I mean, look, I've had a bad month. This has not been a fun month for me, but that's not what matters here. Like, what matters here is the millions of customers. What matters here is all the stakeholders in FTX who got hurt.
While the DOJ looks for an investigation into FTX, lawmakers also spent yesterday looking for answers on Capitol Hill. CFTC Chairman Rustin Bainum testified before the Senate Committee on Agriculture and said that SBF met with the agency several times in a little over a year.
My team and I have taken an initial review of my calendar, and what we've observed is that my team and I met with Mr. Bankman-Fried and his team. Over the past 14 months, we met 10 times in the CFTC office at their request, all in relation to this DCO, this clearinghouse application. 9 out of the 10 times we were in Washington, one was at a widely held conference in Florida earlier this year.
The meetings centered around LedgerX, a company FTX bought back in 2021, which is regulated by the CFTC. Bainum told the committee that FTX had a dogged desire to amend the clearinghouse license for LedgerX in order to allow the company to settle crypto derivatives without an intermediary. That change hadn't been approved by the time FTX filed for bankruptcy, and as of now, LedgerX hasn't itself sought bankruptcy protection.
The LedgerX relationship was essentially walled off from other affiliates and other entities in the FTX family. So we had a lens into FTX, and as I've stated and as you've recognized, the entity is healthy, it's solvent, it's operational, and we know where customer money is. But the limitations of our authority stopped at that entity.
Sticking with Capitol Hill, Washington lawmakers are keeping their crypto holdings despite the FTX crash. At least 9 lawmakers in both chambers traded crypto assets in the past 12 months, according to Capitol Trades. One such lawmaker, Alabama Senator Tommy Tuberville, was on the Agricultural Committee that spoke to the CFTC yesterday. Only one of those lawmakers sold their holdings in the wake of FTX's implosion. Representative Marie Newman, a Democrat from Illinois who lost her bid for re-election in the midterms. An ethics attorney from the campaign legal center tells CNBC that lawmakers who hold crypto could have a conflict of interest as they try to write laws to rein in the industry, saying, quote, "This is another example of how even well-intentioned lawmakers can't escape the perception of corruption when they own individual stocks or crypto." All right, on to our main story. Sticking with the FTX fallout, Crypto World's Talia Kaplan spoke to Charlie Gerstein, an attorney specializing in class action lawsuits, to find out whether customers with frozen funds on FTX's platform can expect to get their money back. He also shares what he thinks about SBF's public statements after FTX's collapse.
It's important to note that you do not represent anyone who filed a lawsuit against FTX, but your firm specializes in class action cases involving decentralized finance and other crypto legal issues. So for some general legal perspective, bankruptcy filings indicate that FTX could owe money to more than 1 million people. Do you think FTX users will ever get their money back following the exchange's collapse?
That seems quite unlikely to me. What appears to have happened at FTX is one of two things. Sam Bankman-Fried and his associates took money, customer money, from FTX, and they either invested it in poor investments and lost it, or they stole it. And either way, it's going to be very difficult to recover.
So what kind of legal action can FTX account holders take now?
So they're going to end up participating in the bankruptcy. And the way bankruptcy works is that the assets remaining in FTX are going to be distributed among the people whom FTX owes money to, including people called secured creditors, which are like businesses that have lent them money, and users. And the bankruptcy court is going to divide up whatever assets it can get out of FTX.
We heard from SBF in his first interview on camera from the DealBook Summit this week, and during the interview, the former CEO of FTX said he, quote, didn't ever try to commit fraud and that he didn't knowingly commingle funds. He also admitted that his lawyers did not want him to speak and that they thought it was a bad idea, but he did it anyway because he felt like it was his duty to explain what happened. From a legal standpoint, what do you make of the fact that he spoke publicly?
I don't think it's conceivable that he didn't know that customer assets were commingled, let alone true. I have no idea what motivated him to take this action. I don't know whether he thinks this will make him look better. In my eyes, it certainly didn't. And I can fully understand why his lawyers advised him not to do that, because so far as I could see, and again, we don't know everything, but so far as I could see, he wasn't telling the truth, which is not a good idea.
Crypto investors in the U.S. sued SBF, Tom Brady, comedian Larry David, and other celebrity promoters, claiming in the class action lawsuit, which I had reviewed, that those celebrities and the FTX founder engaged in deceptive practices to sell FTX yield-bearing digital currency accounts. Do you think these celebrities will actually have to pay up? How do you think that plays out?
I think I would rate that prospect as unlikely. I think it is true, as the lawsuit alleges, that FTX yield-bearing accounts qualify as securities under U.S. law. And what's important about that is that that means that purchasers of those securities have a right to rescind those transactions and exchange the money that they paid for them, which is now worthless because FTX is in bankruptcy, for the purchase price. I think the issue with that lawsuit is that I don't see any allegations right now that these celebrities specifically advertised those accounts. And I think a court is going to be wary of imposing liability on someone for merely doing a commercial without very specifically advertising a product. So there have been some recent actions against celebrities for promoting coins that are ultimately securities. And in those cases, which have settled successfully, the celebrities are alleged to have spoken much more specifically about what to buy, and are alleged to have withheld their own relationships with the issuers of those coins, which I don't really think is the case here. So I'd rate it as unlikely, but not impossible. That class action was brought under Florida law, which might have some specific features that I don't really know about right now.
So we're seeing a lot of aftershocks of FTX's collapse. Just this week, crypto lender BlockFi filed for bankruptcy protection after it was hurt by exposure to the fall of FTX. Do you think we will see more industry casualties as a result of the demise of FTX?
At least a few more. There have been other centralized exchanges that have recently frozen withdrawals, and any exchange that has frozen withdrawals, I think, must be teetering on the edge of bankruptcy. If you can't produce customer money, that means you don't have customer money, and the customers have a claim to the money and they want it. So you're systematically not paying your debts and you're subject to bankruptcy. Any exchange that hasn't already done that, I would imagine, is not likely to fail as a result of FTX. But, at this point, it's speculation. We're going to have to see how that plays out.
Can you talk about some of the class action cases you're involved with? Where do those stand?
So we have 2 pending class action cases against decentralized autonomous organizations that purport to be the kind of business that would avoid the sorts of problems that FTX has caused, right? According to these businesses, you can see your money at all times and no one actually controls your money. But as we allege in one case, these businesses are not decentralized in any meaningful respect. They possess your money just in the same way that Sam Bankman-Fried possessed his users' money. They just do so as a group and as an unincorporated entity rather than as a corporation. So in one class action, we allege that users lost $45 million because of a hack that occurred because we allege the defendant decentralized autonomous organization was negligent in its management of customer funds.
Okay, that's all for Crypto World this week, but we are back again on Monday, and we will see you then.